Hi friends, last week we didn't have any opportunities to put out, but for the next week we are back with few counter trend trades. The first one is on Bharat Electronics or BEL. As you can see from the chart here, BEL is in a prolonged downfall since the beginning of this year. It's in a prolonged downfall since the beginning of this year. However, most recently, the intensity of the fall has reduced with lower volumes on the way to the downside. As you could see here, the volumes are minimal on these lows here. The intensity of the downfall has reduced with reduced volumes. Okay, so that has opened up a counter trend trading opportunity for us. Now, I want you to focus on this portion here after this candle here. Focus on this portion here. Okay, we had a down move here, a retracement, once again another down move here, a retracement, followed by another push to the downside here. Okay, take note, on each of these retracement moves the high point hasn't moved above the previous highs. Okay, that suggests the sellers are active at these higher levels. Okay, however, on the other hand, RSI divergence at these lower lows suggests that the downside is also limited. On one hand, since these retracement moves haven't moved above the previous highs, that suggests the sellers are active at those levels, while on the other hand, RSI divergence, this RSI divergence tells us the downside on the stock is limited. Okay, so for a counter trend trade on BEL, we need to have 3 lower lows with RSI diverging. So let us see if we can have 3 lower lows with RSI diverging. This is our first low, this is our second one, and this is our third one. This is the point corresponding to this low, this is the point corresponding to this low, and this is the point corresponding to this low. So we clearly have an RSI divergence on a 4-hour chart. Please remember that the more time frames on which we have divergence, the better the probability, which means higher the probability to win the trade if we have RSI diverging on the 4-hour chart as well as on the daily chart. This is how the chart looks on a daily time frame. On a daily time frame, we have this low, and this low. As you could see here, this is the point corresponding to this low, this point corresponds to this low, and this point corresponds to this low. So on a 4-hour chart and on a daily chart, we have RSI diverging along with 3 lower lows. Okay, so once we have the setup, the next condition is to wait patiently till we get a convincing higher high either on the 4-hour chart or on the 1-hour chart. This is our 1-hour chart. we haven't had a convincing higher high on a 1 hour chart as well as on a 4 hour chart until now. Okay, two scenarios can happen from this point. The first scenario is in the next few sessions the price might push like this and push lower. That is a very low probability scenario, and the high probability scenario is for a higher high closing from this point. A higher high closing sorry, let me try it once more. A higher high closing from this point, and once we have this higher high closing, we can place a trade on the next candle for a target, or for our first target as this, followed by this as our second target. Okay, so these are the two likely scenarios, and this scenario is the most likely to happen. This is a very low probability scenario. Okay, so now let's pick our target placement tool. Assuming we get a convincing higher high closing and we place a trade on the very next candle, our first target should be this, followed by all the way up into this level as our second target. Okay, our stop loss in this case has to be below the most recent low. This is our most recent, this is our most recent low point. Okay, so this is the trade possibility on Bharat Electronics. Let's see how this trade plays out in the next few trading sessions. We have a similar counter trend trade on Engineers India. Very identical to BAIL or Bharat Electronics. We have a prolonged down move on Engineers India since the beginning of this year. Okay, and just as in the case of Bharat Electronics, the intensity or the volumes on the way to the downside gradually and steadily decreasing. Okay, which opens up an opportunity to go long on Engineers India or EIL. Let's see how. Focus your attention on this portion, on this portion here, on this portion here. We have this low, and this low. On all these lower lows, we can spot clear RSI divergence on the 4-hour chart. This is our RSI. So this is the point corresponding to this point corresponds to this, and this point corresponds to this. On all these lower lows, we can clearly see the RSI is diverging on the 4-hour chart. Now let's move higher into, or let's move to a higher time frame, the daily time frame. On a daily time frame too, we can see these lower lows and RSI diverging and RSI diverging on these three lower lows. So that gives us an added confidence or added confirmation that the intensity to the downside is reducing and the stock might be readying itself to push itself into higher levels. Okay, so now we have our setup in place. Next is to know when and where to place our trades. Technically, a convincing higher high closing from the last low point. A convincing higher high closing from the last low point is enough for us to place our trades. However, in this case, we have a tiny congestion zone within which the prices has moved to and fro. Once again, as in the case of BEL, two scenarios can happen. The first scenario is for the prices to push lower, which is once again a very low probability scenario. The second scenario is for the prices to push above this congestion zone with a strong candle, with a strong convincing higher high candle, after which we can place a trade on the next candle. In such a scenario, this would be our first target, followed by this as our second target. Okay, and this is the most likely scenario to happen. This is the least likely scenario to happen. So once again, let's pick our target placement tool. Assuming the market gives us a convincing higher high and we place our trades here, our target would be this, the first target. Our first target would be this, with a stop loss below this congestion zone, and our second target should be this, with a stop loss below this congestion zone. Remember, this is our congestion zone. So the prices, for us to place a trade, the prices has to push above this congestion zone, giving us a convincing higher high closing. If that happens, we can place a trade on the next candle, keeping this as our first target and this as our second target, with a stop loss placed somewhere below the congestion zone. Okay, so that's our trading opportunity on Engineers India. Let's see how this trade plays out in the next few trading sessions.